Hey everybody, welcome back. In this video, we're going to be talking about breaker blocks and how to utilize them. All right. So a breaker block is, let me start with a bullish example here. So this combines a little bit with the stop hunts that I talked about in the previous video. So our stop hunt is right here that we referred to, and we got our 15-minute point of interest, right? So this is the move. This is the move up before the move down that takes liquidity. All right. So breaker block is really just a failed order block essentially, because this would be, people would be selling this retest right here of this order block, and then it fails it and it displaces through it. Okay. Now with the unicorn setup or breaker setup, you need to have a fair value gap in here. Okay, so we got fair value gap in here. I don't mark out fair value gaps anymore just because you can just see them. But and then you want displacement through it, and then once you get displacement in a close above, that's when you can like buy this retest right here. Okay, you set your limit at the top of the wick or the body, whichever one you want to use, and that is a that is your entry, and you obviously there's your targets right there. So let me go down. I'll show you guys a bearish example. All these trade recaps are posted in my server, by the way, too, so you guys can always go check those out. So this is the move down, okay, before the move up that takes liquidity. So people are trying to buy this order block right here, not knowing that prices hit a point of interest on a higher time frame. It had a stop hunt as well, and it's also inside of a higher time frame point of interest as well. So 4 hour, got M15 stop, M15 point of interest tagged, and then we have a lower time frame stop hunt. So you start to see how the point of interest video, the stop hunt video, and now the breaker entry video are now kind of all tying together a little bit, and how you can utilize them. So this is our entry function. Okay, so move down before the move up, it takes liquidity. Okay, it has to be a swing high or a swing low. Okay, now we want price to displace through it, leaving an FVG, and then we immediately sell once we get the close below, and then target down there. So key things here: swing high, swing low. You need that swing high to swing low to get ran. And then you want price to displace through it, leaving behind an FEG. And then last thing is you need a close above or below your breaker. And then I guess this would be the last thing, is you put your limit order at the bottom or the top of the breaker, depending on which side of the market you're on. So there's a bunch of ICT videos about breaker blocks that are like 20 minutes long, 15 minutes long. Those are two examples, and I don't even think these are really that great of examples in my opinion. So I mean, some 1 minute chart, the other one was on a 5 minute chart, but it's very, very simple. All these concepts are pretty simple, And like I say, people are like, do I use fair value gaps, rejection blocks, order blocks, fair value, and breaker blocks? I'm using like 2 or 3 things at one time. I'm using highs and lows. I'm using a order block / breaker block, and I'm using fair value gaps. I don't enter on the fair value gaps. I just use them. I'm using that for price is tipping its hand, like I talked about in the displacement video. Price is tipping its hand of where it wants to go. All right. So if I was using fair value gaps, I probably would have longed right here. But because I'm using points of interest, my daily bias, I have a narrative with that point of interest, I know to short. Okay. So anyways, hope you guys enjoy this video, and I'll see you guys back here on the next one.